So I started being aware about like crypto in general around like 2011, 2012 with Bitcoin. I consider myself a Silk Road fanboy. And I don't say this like to flex I was in Bitcoin early, because I wasn't in any meaningful way. There are two reasons why I say this. The first one is that I think that people shouldn't be ashamed for buying drugs. I think like if more people actually use psychedelics occasionally, we would live in much healthier society. So I think it should be just normalized. And the second reason is that was my first exposure to Bitcoin, and it took me like 3 years or more to get involved in any way. I just considered Bitcoin to be this like funny money on the internet, nothing more. There was like no like value set. There was no like cultural vibe that was appealing to me. And that first came with Ethereum in like 2015, 16. I started organizing meetups around Ethereum, and long story short, it eventually led me into the Ethereum Foundation, and then to Starting Pawn last year. So today I'm going to talk about just like some definitions of terms. What is a mortgage? Who are crypto natives? And then kind of see the issue of like how is it for a person that lives in crypto or who is crypto native? What's the pathway to getting a mortgage, or just like getting like a regular like financial instrument which is available to basically anyone else from the rest of the economy. And then finally, I'm going to talk about like how are we tackling the issue. So what is a mortgage? I guess doesn't need a lot of explanations. Like most people are aware of the term. You have these like two nice definitions you can find on the internet. A mortgage is a debt pledge. It's a pledge which basically disappears upon repayment or default. You can also find the other definition of a debt pledge, literally meaning like a pledge that disappears when you're dead, but the debt is kind of like referencing the pledge, not you, luckily. So it's nothing bad. And then, of course, it's like mostly used in real estate financing. So, I mean, like if you're, I don't know, like, 20, 25, 30, you're considering like purchasing something, or maybe even older, then very likely you were looking into getting a mortgage to buy an apartment or something. And why wouldn't you? So who is a crypto native? If you consider yourself a crypto native, could you please raise your hand, just like so I know if there's anyone falls into that. So I guess like most people here, which is nice. I was told there will be like a slightly different crowd that I'm used to. So kind of my vague definition of what it is to be a crypto native is that like a person needs to obviously hold digital assets, but the holding isn't enough. It's like if you're hodling Bitcoin, like you're not a crypto native to me. You probably just like see this as an investment instrument, and not really as a thing that you actually want to incorporate in your daily life. So to me, a crypto native is a person who has digital assets, who is a DeFi user, who pays with crypto relatively often. So it's not just about like sitting on something; it's actually using something. Then one kind of like interesting aspect which I think kind of connects to crypto natives is, well, crypto natives don't understand the concept of bank holidays. It's just like, I don't get why you can't make bank transfers during the weekends, like, or why does it take 3 days for international transfer? I'm sure there are reasons, but it's like very hard for me to like grasp those reasons with the technology that we have today. And yeah, obviously demographically, we are mostly looking at like millennials, Gen Zs, and like whoever comes after. So what's the problem? I would say there are 3 layers of the problem. There's a social, economical, and technological level here, which kind of makes it hard for a crypto native to get a mortgage. So what's the social problem? The social problem is that this is a new industry, and the industry is still connected with like a lot of scams and like uncertainty, a lot of risks, and chances are that if you're a crypto native and you come to this like traditional financial institution and you'll say, hey, would you guys like give me a mortgage? They'll be like, Well, not really, because well, you're risky. Like your behavior is unhealthy. You're in crypto, so like not to you. If you for instance, so now recently I just learned that there is this like checkbox that like some banks included in their like surveys when you're applying for a mortgage, and if you have exposure to digital assets and crypto markets, and if you're a trader and you actually say yes, the chances of you getting a mortgage are pretty dim. The other aspect is that if you actually are, you know, a true native and you even like earn cryptocurrencies, you're being paid by a DAO. You basically to the bank process, you're unemployed. Like you don't have anything. Like you don't fit into their boxes. Therefore, you don't exist. And it doesn't matter like how much money like you're actually earning into your wallet like transparently. The other, I mean, the other aspect is like, obviously, like even like among crypto natives, like these assets are like kind of new. It's like definitely not easy for someone to say, hey, I'm taking all the risk and I'm just like giving you this money for nothing, and just go and buy a house and you maybe repay me. And if not, then well, probably I would try, you know, like go to a court or something. Then the other social issue is that millennials are screwed. I mean, millennials are the largest productive demographics in most developed countries, but they're also the smallest demographic cohort in this like productive age in terms of like property position. So, I mean, you obviously are aware of the topic of like lack of housing for like young families and whatnot. And it's becoming increasingly hard, and kind of with longevity is a nice thing, but it also brings these issues of like, well, yeah, you actually have like more people like that are born on this earth, and you have limited space relatively, and you have people living longer. So this like flow through even the real estate doesn't happen as quickly. So yeah, this is again mostly tackling like millennials and Gen Z. So we're kind of like forward facing. What's the economical issue? So as I said, like if you are in this like millennials / Gen Z cohort, then you looked at real estate, you were very likely looking at getting a mortgage. And as a matter of fact, over like 80% of all regular real estate purchases are financed through mortgages. And also, you know, it makes sense. Like, especially like these days, the inflation is like pretty much higher than the interest rate that you'd get on a mortgage, like even though the rates are increasing. So unless you are, you know, like super rich and you're buying like a high-end property, you will be financing that. Yeah, there's the other aspect. Like if you are in crypto and you actually made it to some extent, now you want to buy real estate, well, then you have to go through this like very painful process of like losing exposure. You have to sell. You have to sell the crypto. You lose exposure to something which you consider to be like the, you know, future technology, the future of money, whatnot, the future of friends, and you obviously like have to tax that money. Then you go and like buy the property for cash. And the last aspect, again, that's always bound to the novelty. The pricing is hard. Like you cannot like universally like price all of these assets. Obviously, they are volatile, and today volatility in crypto means getting liquidated and getting wrecked. So we already have a lot of DeFi projects, right? We have a lot of solutions out there in the space that allow you to borrow or lend tokens on most chains. But I would say there are still some like technological barriers for us to like get to the spot where you can actually like use your digital assets and like back a mortgage with them. The first one is, well, there are whitelists. So there's only like a very limited number of assets that you can actually use in these setups. Which, I mean, again, makes sense because you want some protections from the system, but you also like exclude basically the majority of the market like out of it. The other problem, which I mentioned previously, is liquidations. Like, imagine getting like a 15-year, you know, long loan, backing your real estate purchase with your entire like net worth and getting liquidated the next month because the market dipped for 2 minutes. That's totally unfeasible. Plus, you have like in those setups, you have the on-chain oracle problem, which kind of like influences like your own contract. So you have like this third party, attack vector, which like you cannot reasonably solve on-chain. And again, pricing is hard. Obviously, these whitelists exist, these pools exist because like there's only a limited amount of assets that you can feasibly price. So you can really have your cake and eat it too. Like if you want to like borrow money on chain, you actually have to have even more money and then borrow just a fraction of that. So all of these reasons kind of like led us to the point where we were like, hey, all right, so why do we live in such a setup? Like, can we change it in some way? Can we just allow like any digital asset to be recognized as something someone else would be like willing to lend you money against? Taking like individual risks and eventually getting to a point where, well, yeah, you could back your real estate purchase with crypto and then like repay it against crypto instead of the real estate. So created Pawn. So Pawn today is essentially like an OpenSea for lending. So you can use like any asset that was just freshly minted, like any NFT, but even like fungible tokens, liquid tokens. There are no whitelists. There are no liquidation risks for the borrowers. So it's essentially a pawn shop. You come over, you get an offer for like an asset that you own and that you want to keep. And if you don't want to sell the asset, but you still need liquidity for whatever, you can basically like pawn the asset for a while, get a liquidity, and like pay it back as long as you can, afford it later. So we only do like fixed costs, fixed interest loans. It's all pretty simple. And the beauty of that is like you don't need any on-chain oracle. It's all just like encapsulated at the one moment when the deal gets sealed. So it's all pretty basic. There's no rocket science. There's no like automated market making. There's no like warning curves or anything like that. It's all super simple. And you also only need one transaction to like seal that. So that's just one example of a deal. And I'm hopeful that this will kind of like bring you to the mindset of like, well, yeah, you can actually feasibly buy a flat and back the flat by your NFTs, which you don't ever have to sell. So this is a deal that we made recently, which is a Bored Ape 1614, which was used as collateral for a loan of a size of 126,000 DAI. This may seem like not a lot of money, like if you live in Berlin or Paris or like any like quite expensive city. But if you live like in the outskirts, pretty much like anywhere else than like the Western Hemisphere, well, you can already purchase property for that type of money. So, well, this is just like one thing, one NFT used as collateral, but you can imagine this to happen with literally anything, or even like a bundle of assets. So you could use your gaming portfolio, which you farmed in your teenage, and you can like get out of university and just be like, hey, so I actually have like 100K worth of assets, which, well, yeah, one option is you sell them, you repay your student debt if you're in the US, and then you're kind of like, free, but you have zero. Or you can do the same thing that essentially the entire, the rest of the financial industry does, and just like you can actually keep those assets, keep exposure to those assets, lend against them, repay your student debt, and then just like keep your digital assets, and you can keep the debt that you want instead of living with something that you kind of inherited. So, I mean, I mentioned the concept of mortgage, and essentially this is the stuff that we built today. So the stuff I was talking about that's already functional. The stuff that we are focusing on right now is this concept of like DeFi mortgages. We built like a bunch of toolings around that. I'm not sure whether it makes sense to like run into details now, so I will just explain the concept of the DeFi mortgage, and I'm happy to chat about these other concepts of like self-custody of collateral and the token bundles later on. So how does a DeFi mortgage work? This is kind of an example of a game item, a productive asset. But let's say in a traditional like lending scheme in DeFi, you basically have to over collateralize. So if you wanted to borrow like $500, you would already need like $1,000. I mean, depending on like where you borrow, obviously, but roughly like $1,000 worth of something to borrow the $500 against it. Now, in the concept of DeFi mortgage, like you don't need that. You can actually do exactly the same thing as like mortgages do, where you just have a deposit, which like in this case would be like $500, and you have someone who's willing to back the other like $500 to your purchase. And then basically you bundle that money, you go to a marketplace and you purchase like $1,000 Axie. The Axie in the same transaction gets wrapped as collateral in this like self-custody way. So what you end up with this one transaction is like you having $500 in the beginning, and you having a loan and an Axie worth of $1,000, which you can use. And you can basically use that asset. You can use the Axie to repay the loan over time. So that's essentially what like most of the real estate development companies do. You know, they take like big loans, they build up something, then they rent it out, they repay the loan from the proceeds. So it's kind of like running a business. But what this does is that it allows you to enter these markets even with like a much smaller capital than you would initially need. So in the long run, what we want to build with Pawn is essentially this kind of like lending union DAO where you don't need like you don't need like banks backing all of these loans and then just like coming to like central banks and like getting the money and just basically like transferring those to you with like taking a margin on those. You can have like people in the room, backing these loans. So obviously now it literally works as a pawn shop. We want to have like gradual payments. We also want to have like perpetual loans where you can like even swap the collateral if you need to. But in the long run, and this is something we are targeting like 5 to 10 years, we believe that digital assets will become normal. There will be a normal thing that people will collect, use, play with, generate like in their work, and we just want them to be recognized as anything else that like people have created so far. Let it be real estate, let it be like, I don't know, stocks of companies, let it be art, because you can also back a mortgage with art. That's happening, but you cannot do it with digital art. So for us, a rough roadmap. We are currently in this closed alpha mode. We are releasing the open beta in a few weeks, so anybody will be able to use the protocol. We don't have any fees because we basically just want to learn about like how users use and interact with the protocol. So any interest that's being paid, that's always between the two users. And yeah, that was it. I guess like a quick summary is that we are building something which is like made for crypto natives and people who already live in this dimension of being crypto natives and like having digital assets and kind of like wanting to stay in the ecosystem as well. Well, we are probably not building something just for like holders and investors who just like want to leverage on and eventually want to like sell everything and get out of the industry. We want to build something that will allow you to like keep exposure to the industry and help the industry to grow. And yeah, I also think that now we are in the stage where there's like more regulatory constraints that there have been in the past like 5 years. And for me, this is like a huge indication of, well, if we just keep on pushing, if we just keep on building this stuff, we'll win. And eventually, like this will be the way. And I'm hopeful that in I don't know how many years, probably like decades, but people won't have to like go to a bank and won't have to like negotiate their mortgage like at the counter, going like 3 times, 5 times, and having to make a case and prove they're like worth something to an analyst at the bank, and they'll be just able to like do a couple clicks and actually do it from home with their digital assets. And yeah, so if you're planning to like get out of crypto, my hint is like don't do it just now. Like don't sell it and just like pawn it later. That was it. I also have one thing to shill, which is Eat Prague, happening in 2 weeks. So if you scan the QR code, that will bring you to the website eatprague.com. Eat Prague is a solar punk theme hackathon and conference. There will be roughly 600 people there. I think there are still some hacker slots open. We are trying to mix up the attendees and kind of like get a mixture of like international community and European community. So we're kind of playing it heavy on like having enough like locals around. So if you are in the region in Berlin, you know, it's like super close. Please sign up as hackers or just like show up to the conference. And yeah, enjoy. Thank you.
Are there any questions?
How do you determine the risk and the rate for every asset?
So we don't do that. So we basically build a protocol and we try to connect like enough like data points. And this is also the data streams about like pricing the assets. It's not something we have now, but we will be adding that to the platform. But as well, we don't actually need it because what we learned from the users so far, especially from kind of the people with the capital that are willing to use for lending, those are usually people who have their own price assessments. So they have their own algorithms, or they are collectors of the assets that the other folks are looking to use as collateral. So for them, the consideration is basically like, would I be willing to buy that asset for this amount of money? And the worst case scenario for them is that like if the loan isn't repaid, they are going to get that collateral. So the Bored Ape case was basically like 50% loan to value. So roughly like half of the market price of that asset was lended in that case.
And the rate, the 4.4. So thank you. The rate, who determined that?
The lender. So you essentially like. You have kind of like market rates which you can kind of like pick and see from other places. The borrower basically just signals like what's the asset. Well, we don't even tell you like which asset you have to use as the credit asset. So you can literally use any ERC20. Yeah, then obviously it's the market process of like figuring out the right rate. But the reason we allow this is basically we want the borrower to get the best rate. So then you have the lenders that want to leverage the capital and they want to compete for actually like having their capital utilized. So there's this like race to the bottom of like who is willing to and able to provide the lowest rate. With the DAO, we'll start establishing kind of like a baseline, but we'll encourage like other market participants to go below that.
So in the underlying contract, is it based off Gnosis Safe or any other standard to store the NFT?
It's currently a prototype. It's not Gnosis Safe itself, but you can basically take the blob of the execution function and you can add it to Gnosis Safe. So we are looking for a way how we could like integrate it into Gnosis Safe directly, and you could then just like basically add a modifier to the function which would enable the functionality.
Anyone else? All right. Thank you.
Cool. Thanks as well.